So, good afternoon, everybody. I'm very happy to welcome you on our webinar on gold that we're having today. We called our webinar The Shine and the Shadows, what the gold boom means for producing countries. We are organizing the webinar together with EFSE, my organization, EFSE, Austrian Foundation for Development, Research, is organizing the webinar together with DKA Austria. My name is Karin Kübelberg. I'm a senior researcher at EFSE working on raw material policies. The purpose of our webinar today is to understand better the international gold sector and especially the interconnections between the rising prices and the extraction of gold in resource-rich countries. And we want to talk about the impacts of this rising extraction and maybe also other impacts that the gold sector has on resource exporting countries. I'm very happy that we have very distinguished speakers at our webinar today and also very distinguished audience, and I'm looking also forward to the discussion after the inputs. Before I introduce the speakers with more detail and also the topic a little bit more, I want to hand over to Anneliese Herzig from DKA Austria to give some introductory and welcoming words from her side.
Thank you, Karin. On behalf of DKA Austria, which is the development agency of the Catholic Children's Movement in Austria, I would like to express our gratitude to Karin and EFSE for organizing this event. My name is Anneliese Herzig. I'm part of the Department of Advocacy, and I'm the current coordinator of our project, so-named Project Gold and Church. I think we are all familiar with the fascinating shine of gold, whether as jewelry and decoration or as a financial instrument, for which it is especially promoted in uncertain times like ours. I believe there is good reason to speak of the shine of gold in the singular while referring to its shadows in the plural. Indeed, gold mining in all its forms, whether large scale or small scale, causes an enormous range of harm. Through our partners in Africa, Latin America, and Asia, we are aware of the damage which is inflicted on the environment, on human health, on human rights, and on social cohesion. And as a children's movement, we are particularly concerned about the violations of the ecological rights of this coming generation. And for this reason, as a Catholic organization, we advocate for a church that uses no gold or at least significantly less of it. We work to raise awareness and support our partners in their struggle for a better future. And I think this webinar is another opportunity for us to learn and deepen our understanding on this important topic. Once again, thank you, Karin, for organizing this event, and a warm welcome to all of you. Thank you, and I hand over to Karin.
Thank you, Anneliese. And thank you for the great work that you are doing at DKA Austria, the advocacy work that you're doing, and also some successes that you have already achieved within the church that you can tell us maybe later. So if we think of gold is traditionally seen as a safe haven for investments, for savings, which means when insecurity is high and when the economy is in crisis and when stock markets go up and down, investors and people buy gold, and also central banks buy gold to secure currencies. So gold is seen as a security, as something to keep, for instance, in India in terms of jewelry, or in Austria in terms of gold coins that the grandparents offer for Christmas to their grandchildren for their future. But the question where and under which conditions this gold is extracted and what are the impacts of the high consumption of gold is rarely asked. And an aspect that I want to add now at this specific moment of time is, for long term, and long time, gold was actually seen as for securing stability, for having some security in the future. It was not seen to have high gains and high quick gains. In my view, this has changed in the past years. As you could follow in the media, in 2025, gold prices have reached historic highs. Today, I just looked it up, the gold price is $4,200 per ounce, which is more than two times higher than 2 years ago. And it's 60% more than 1 year ago, which is really an unprecedented rise in such a short time. And if you look at investors' websites and mining websites, in investor speaks, this sounds like this. Gold is one of the best performing assets this year. The combined reserves in the ground for the top 20 projects at today's prices are worth a mouth-watering 3.7 trillion. The mouth-watering 3.7 trillion. So this mouth-watering development leads to the fact that today 50% of the exploration efforts go into the gold sector. And there is a lot of pressure in all over the world to open up new extraction sites. And a lot of those sites come with conflicts, as we know and we'll hear also later in this webinar. So the question for this webinar today is, how mouth-watering are these perspectives in resource exporting countries? And who benefits from high prices along the value chain? And who suffers the impacts of higher gold mining? So this is the topic that we're going to explore today with experts with a lot of knowledge in this field. So let me present our speakers to you. We have Yvan Schulz, who is going to start. He is a senior researcher at the raw material unit at SWISSAID, a Swiss development organization. He has been doing extensive research in the gold sector, and his work aims to improve the management and governance of natural resources, particularly of gold. We have then also other speakers, which I'm going to present just before they speak. We have David van Wyk from Benchmarks Foundation in South Africa, Michael Tost from Technical University of Leoben, and Magdalena Pupp from the Austrian Ministry of Finance, and they are all going to be presented by me before they speak. So the floor is yours, Yvan. I'm looking forward to your inputs.
Yeah, thank you very much, Karin, and thank you, Öfse, for the invitation. So I have the difficult task of introducing to you the gold supply chain, its mechanisms, its function, the risks, and so on in 20 minutes. I'll do my best. I'm representing here a small team, myself and Marc Hummel, who some of you know already. So just to tell you in a couple of words who we are, we represent the Swiss NGO SWISSAID, which has its headquarters in Switzerland, is active in 9 countries of the Global South. We do mostly work on agroecology, the rights of people in rural areas and so on, but we also have a small unit that looks at raw materials, and this unit has been focusing on gold for the last 5 years. We do research and advocacy. I've included a few pictures of the front pages of the report we've published in recent years on that topic. We're in regular exchange with regulators, with certification standards, companies and CSOs and so on. And we even have a project in Tanzania on ASGM formalization, so artisanal and small-scale gold mining formalization. So let me try to run you through the gold supply chain to begin with. Well, I'll be very, very quick with this. We're talking about certain material. I don't need to go too much into detail on this, but I included in the slides nevertheless, so you can have it in case the slides are shared later. I don't know if this is planned or not. So that's why I left a little bit more content, but I really won't be talking about all of it because it would take too much time. Here, I just want to emphasize that gold is a little bit special because it's both a commodity and a currency. So it has these both roles always at the same time. And maybe one important aspect of the commodity is that it's fungible. So a gold ingot is replaceable by another identical one, and this has consequences for business. If you have a contract, you can settle the contract with any gold, so you don't necessarily need to ship gold, for instance. I can go into details later. As you said, Karin, traditionally this is a safe haven type of investment, which also explains why central banks are currently buying a lot of it. You talked about the huge increase in prices. Indeed, in the last 2 years, it has increased twofold or more, and in the last 10 years, fourfold. If we look at where the gold comes from, we see that about 3,600 tons come from mines, so it's mined gold, and about 1,300 tons come from what is still called recycled gold. I'll go into more details later, but basically most of it is mined gold, and this is the recycling share of total supply. Has been going down from 35% to 25% in the last 10 years or so. If we look more specifically at mined gold production, the main producing countries are China, the Russian Federation, Australia, Canada, the United States, and so on. And then you see a few developing countries, Ghana, Indonesia, and so on. So you have a lot of developed economies. You have quite a few emerging countries as well, and some developing countries. Traditionally, the gold supply chain is split into, let's say, 3 segments. You have the upstream, what we would call the midstream, even though the term is not really admitted, and then the downstream. So if we look at the upstream, so that would be mining. We traditionally also distinguish between large-scale mining, LSM, and artisanal and small-scale mining. So large-scale mining is heavily reliant on capital and equipment, large machines, a lot of money, has to use a long-term perspective. So the mines are funded, for years before they even start producing. And then if we look at ASM, it's heavily reliant on labor, so it has a more short to mid-term perspective. This is a simplistic dichotomy because actually what you see on the ground is everything from a guy with a pickaxe to a multi-billion dollar mine that requires trucks and everything. The output of these mines is called doré. Doré is a synonym of raw gold. Can have different levels of purity. I won't go into details here. So if we look more closely at ASM, artisanal and small-scale mining, you have various types of mines. Tools are usually pretty rudimentary. Mercury is used for amalgamation, has low recovery rates, so you don't get all of the gold out of the ore through mercury use. But then you can use cyanide on tailings, and that's what happens in processing plants called plantas in South America, for instance. There's the issue of informality, so the question of how to formalize that sector, the issue of illegality with the involvement of some criminal groups, for instance, armed groups, and I'll stop there for ASM. If we look at LSM, you also have different types of mines. Most of these mines are operated by large mining groups, most of which are members of the World Gold Council. And keep in mind that the gold content in the ore is very low in those type of mines. It's only 1 to 2 grams per ton of rock. So you generate a huge amount of waste by doing this kind of mining. Employment, I'll just say briefly that most people who are employed in gold mining are employed in the ASM or ASGM sector, so artisanal and small-scale mining. Much less are employed in the LSM, but we have precise figures for the LSM and not for ASM. There are several problems, risks, or challenges, depending on how you want to see it, associated with gold mining. There are environmental problems, operational problems, governance problems. I don't need to go into details here. We're going to talk about that later, and I'm sure a lot of you are informed already. There are several types of certification standards, also really depending on what type of mining. So you have some for ASM, but they correspond to a very small percentage of total ASM gold production. And then you have others for LSM, including the World Gold Council, which is maybe the most known one. Sorry, I'm going a little bit fast, but these are not the most crucial things. This is more like to have everyone at the same level of knowledge. Switching now to the midstream, so midstream between downstream and upstream, there are several types of players. You have aggregators who buy gold from various artisanal and small-scale mines and have or not processing plants. You have refineries that can be uncertified or can be certified, including through the LBMA, which is the London Bullion Market Association. I'll say more about that association later on. And a very important actor in this midstream are the precious metals refiners. They're typically small to medium enterprises. We don't know how many there are in the world in total, but we know that 71 are members of this very important certification standard, the LBMA. These major refineries are based in Switzerland, Germany, Japan, South Africa, and the UAE. And they usually don't buy gold in their own name, but they buy the gold in their client's name. So an interesting thing is when you ask a refinery where they buy their gold, they might answer, we don't buy gold, which is a bit surprising the first time you hear it. But anyway, that's the way the business is shaped. And their output is fine gold. Once again, you have certification schemes for that midstream part of supply chain. London Bullion Market Association is maybe the only one you need to remember. This stage at least. And then some places play a more important role than others. We call them gold trading hubs, sorry. And here you have a list of them: the UK, Switzerland, South Africa, the UAE, China. We're going to go back to this in a moment. There are risks associated with this part of the supply chain, mainly illicit gold flows, money laundering, conflict financing, fake recycled gold because it contains freshly mined gold. So due diligence is necessary, and it requires several types of processes, including audits, traceability. And if we look at traceability, there are several types of tools, and some refineries offer services with full traceability to their clients. Now switching to the downstream, here you have a list of the main gold consuming countries, and you can see that China and India are at the top of this list, and then followed by the United States, Germany, but all of the rest of the countries consume a lot less. So really those two giants are the main consumers. If we look at consumption according to sector, we see that almost half of it goes to jewelry or luxury more generally, and then maybe the other smaller half would be investment and central banks taken together, because actually central banks is also a form of investment. Gold reserves are also the same, but it's traditionally distinguished anyway to have precise figures on central banks. And then technology, so for instance, gold in smartphones would be only less than 7%. Traditionally, the gold supply chain is portrayed as a straight line, going from the upstream through the midstream to the downstream. That is a fiction. That's not exactly how it goes, but I've used that fiction to present things to you so far. In reality, things are more complex, and the flows can be mixed, can go backwards, and so on. I'll be more specific in a moment. Regulatory framework, I'll just skip it, but you have a few things here. Maybe what applies to the EU here is the Conflict Minerals Directive, which applies to gold and also to tin, tungsten, and tantalum. That's an important piece of legislation here. Now let's look at gold imports into the EU, which is interesting for you because I assume most of you are based in Austria and also into Switzerland, which is relevant in that case. We're going to see countries of origins and types of gold. So the total of gold imported into EU countries in 2024 was 24.7 billion. Most of it came from outside the EU, but there was also considerable intra-EU trade. The main countries of origin are Switzerland, first place, with 63% of these imports. And if you look at, Austria, more specifically, you see that 65% of the gold imported into Austria came from Switzerland. I should mention that South Africa is another important country of origin for the EU. And the types of gold that are imported into the EU are mainly LBMA certified gold, but to a lesser extent also gold certified according to other standards, or mined gold that is not certified. Total gold imports into Switzerland were very high in 2024. That's because Switzerland plays a major role on the gold market. So more than 2,000 tons. And the main countries of origin, as you can see, were the USA, the UAE, Canada, Uzbekistan, Germany. Sorry, it's a mix of French and English. Anyway, the UK, Hong Kong, Burkina Faso, and so on. In yellow here, you have those places that function as trading hubs and where very often traceability is a problem. So you see that these trading hubs where traceability is a problem are really important suppliers of gold to Switzerland. And I should mention that in 2025, January to July, so a half year, the Switzerland imported 316 tons from the UAE, which is a really problematic gold trading hub. So this has gone up quite significantly since last year. Gold imports into Switzerland, if we look at companies and the origin of the gold, the main companies importing gold into Switzerland are refineries. There are also other actors such as banks and trading companies, but they import less and they tend to rely on the refineries, or at least on the LBMA standard. The types of golds imported are mostly refined gold and only 30% of mined gold. If we look at the total, the refineries only would import a little bit more mined gold, but still more refined gold than mined gold. How can we know that for Switzerland? Because Switzerland, the Swiss customs use detailed subcodes that you can see here on the image, and that information is not always available for all countries. Actually, for most countries it isn't. So the conclusion we should draw from this is that the origin of a significant part of the gold entering Switzerland is unknown, and that is quite worrisome, preoccupying. And now I'm going to tell you a little bit more about why that is problematic. So what are the risks in the supply chain, the risk of having illicit gold flows? First, I should say that that you shouldn't imagine that there are really like these two types, either licit or illicit. You know, you can have illicit gold flows that become licit by the way the supply chain functions. So I'll give you an example. Let's say you have gold that is extracted from an illicit mine. Why illicit? Because it doesn't have a permit, because it operates in a protected area, because it has a known human rights violation, for instance, forced labor or child labor. And let's say this mine is in Burkina Faso. This is just an example, but it's based on real facts. This gold from that mine could be smuggled to Mali, and from there smuggled again, but to the UAE, to Dubai. It can be refined there and then legally exported to Switzerland. There's a high risk, you know, that this can happen. Can be refined again in Switzerland, then legally exported to the UK. And so you can end up with a Swiss gold bar, with LBMA label, that is stored in a renowned vault in London, and that is deemed fully legal and compliant and so on. When in fact, that bar contains at least part of the gold, part of the gold from that bar would be from that illicit mine in Burkina Faso. So there are loopholes, in other words. The supply chain, how does it work? So this is just to tell you that even though there might be a higher level of traceability with regards to large-scale mining, there are still serious issues with that type of mining. And that gold from LSM mine is directly imported and refined by LBMA refineries. So in the image below with the figures, you have metal focus would be for the total amount of LSM gold produced, and then LBMA would be what the LBMA certified refineries imported. And you can see that they imported most of the LSM gold worldwide, and they imported it directly. So direct imports of LSM gold into Europe, we don't have any precise data for the whole of Europe, but we know, for instance, that Germany imported 21 tons. And for Switzerland, it's a whooping 422 tons in 2023. We did a study on Africa, which I'm going to talk a little bit more about later, in which we found out that a few refineries are responsible for most of the gold, of the imports of gold from Africa. These refineries are Rand Refinery, based in South Africa, and then Metalor and a group known as MKS Pump, and that has also a refinery in India called MMTC Pump. And these refineries imported a lot of industrial gold from Africa, and we've documented the issues that were linked to all the industrial gold mines in Africa, and found out that there were serious problems with the majority of them. If we look at ASM gold, there are also issues, environmental ones, human rights ones, conflict financing, and so on. And there is very little direct sourcing of ASM. So it would be really important to have more direct sourcing of ASM, because if you have shorter supply chains, you reduce the risks, but it's also very challenging for a number of reasons that we can maybe discuss later. So the main finding is that there is only a very small portion of ASM gold that goes directly to LBMA refineries. In 2023, there were only 45 tons. When we know or estimate that global ASGM production was rather around 900 to 1,000 tons. So really very small portion of that goes directly to certified and, I mean, responsible actors, or actors that should actually, who should in fact be acting responsibly. We don't have precise data on direct imports of ASM gold into Europe, but we suspect that there are small quantities anyway. We have a little bit more data on direct imports of ASM gold into Switzerland, but the quantities are low. I won't go into detail on who imports this gold exactly, because we don't have time. But I'd like to spend some more time talking about reprocessed or so-called recycled gold. So most of the gold that flows into Switzerland, and once again, Switzerland is the main source of gold for Austria and for the EU. Most of the gold coming into Switzerland is fine gold, so it's been refined already, and that means it contains various types of gold, and so it can contain gold scrap, it can contain old bullion, it can contain even Nazi gold. You know, gold doesn't disappear, it's just being recycled the whole time. Actually, reprocessed would be the right word. It has gold that comes from e-waste, from electronic waste, and it can possibly have also freshly mined gold. So the risk really with this so-called recycled gold is that some illicit gold has been disguised and introduced into, and is being introduced into the gold supply chain. So here, once again, we compare metal focus data, which is on total figures, with LBMA data, which is only for LBMA certified refineries. And you see that the difference here in total mine production, you see that the LBMA refineries take only a portion of the total mined gold. The difference is 1,719 tons. That does not go directly to LBMA refiners. The risk is that this gold might be arriving at these refineries' gate anyway, but via indirect routes, such as intermediary refineries based in trading hubs and so on. And on the other hand, the LBMA certified refineries source a lot of so-called recycling gold, when actually, according to Metal Focus, there shouldn't be as much. You know, so there's something problematic here in that ratio between the yellow figures and the green figures here. So once again, as I told you, the supply chain is more complex than a straight line, you know. And here you have, for instance, a diagram by the OECD showing how the gold can flow, in particular the ASM gold. And you can see those recycling logos here stand for, you know, secondary material, and there's really a risk that at some point in the supply chain, some ASM gold is being channeled into that flow of secondary material, presented as secondary material, that the due diligence is not exercised properly, that this is not identified, and that therefore the illicit gold or conflict gold or dirty gold find its way into the legal market. So this risk is omnipresent. It's really present throughout the world in many different types of supply chains and so on. And it can also the supply chains change quickly, so it can reappear, this risk, in different forms. So see, for instance, after the sanctions, the Russian gold was channeled through Armenia, sent to the UAE, Hong Kong, and China, and then it can be bought there and used, and then at some point remelted, and then it would not be traceable anymore. So you wouldn't know this is Russian gold, and then the sanctions can be bypassed. We should not assume that the risks are only outside of Europe, because there've been some examples of intra-European problematic supply chains. There was a case, for instance, where gold linked to organized crime in Italy was illegally imported into Switzerland. That involved Argor Heras, which is one of the main LBMA certified refineries. There's also a case of gold stored in Liechtenstein that was associated with a money laundering case in Venezuela, and so on. There's also problematic aspects with jewelry, for instance. Jewelry can be created to give the impression that we have indeed recycled gold, but when in fact the whole purpose was to mask the origin of the gold, hide the true origin of the gold. Trading hubs are a known risk, and that has been acknowledged by the EU Commission in its assessment of the LBMA standard, for instance, when it wrote, transit hubs play a role in global supply chains of 3TG, so the 3Ts and gold, so tungsten, tin, tantalum, and gold, because they link potential illicitly sourced and traded gold to the EU market. And let me remind you that if gold is refined several times, as it is usually in trading hubs, then it becomes impossible to trace physically, so we lose the true origin. All these trading hubs that are linked here are associated with risky gold. We have Hong Kong because of the presence of conflict gold from Russia. We have Turkey, gold from Libya, Bolivia, and so on. Singapore, the United States, the United Arab Emirates, in particular in connection with gold from Africa. And now I will need to ask the organizers if I have any time left, because I don't know for how long I've been talking.
Yeah, you've been talking about 20 minutes, but you can, if you talk for 3 more minutes would be
sure.
Okay. Mm-hmm.
Yeah, let me just grab a little bit more of your time to tell you about a study we've done here at SWISSAID on that particular last example. So the role of the United Arab Emirates as the destination for a lot of illegal gold from Africa. So we published a report in 2024 where we compiled a lot of data from African countries and from countries importing gold from Africa. And we found out that among all the importing countries, the UAE was really playing a very specific and problematic role. Here you see in dark blue the amount of gold that is imported by these importing countries, so the UAE, Switzerland, India, Canada, and so on. And that dark blue column on the left-hand side can be compared with the light blue column on the right-hand side, which is what the African countries, all of them taken together, have reported as exports to these countries. And you can see that there is a huge gap with regard to the UAE. Here you have the same thing, but over a time span of 10 years, and you can see that that gap is present throughout the decade. We calculated that for the whole decade, that gap amounted to 2,000, almost 600 tons of African gold. So that is once again gold that was declared on import in Dubai, but not declared on export in Africa. And why is that problematic? Because African countries could not levy any export tax. So that is all that money that was lost, in terms of state revenue. And here you can see that that problem exists for a lot of African countries, and for many of them it's quite significant. So for 21 African countries, the gold declared for export was less than half of the gold declared for import into the UAE. So that is also really preoccupying. And I should mention that the UAE, so we relied on data that went up to 2022 in our study that was published in 2024. And you could say, okay, but the UAE adopted a new regulation on responsible sourcing of gold on January 2023. So things should have changed, no? But actually, we see that things haven't changed at all. The UAE imported even more gold from Africa, and it kept on importing from a whole series of problematic countries. Just to give you one example, in 2024, the UAE imported 52 tons from a country, from Togo, a country that is known to have 0 gold mines, that is known to be a trading hub for smuggled gold from neighboring countries. And that problem has been known for at least 10 years. So it's really unacceptable that, that this keeps on happening. So I'll just stop here. You have our email addresses if you need to get in touch. All the reports and things are available on our website. And if you can't find them, just drop me an email. I'm happy to be in touch with you. Thank you very much.
Thank you so much for this overview. And now, David van Wijk, we continue with you. David is an industrial social scientist and a lead researcher at the Benchmarks Foundation in Johannesburg, which was created more than 25 years ago, as you told us. Or you have been working there for 20 years. You can then specify a little bit more. And Benchmark Foundation monitors the social and environmental impacts of mining and promotes corporate social accountability in Southern Africa. And as we heard from Yvan, South Africa is a very important country that extracts gold, but also a trade hub, and a lot of countries around South Africa, there's also gold extraction taking place. So what is your perspective from the side of producer countries? What impacts does the high price and the high extraction and the gold extraction and trade have on South Africa and Southern African countries?
Thank you very much for allowing me to speak quickly. Benchmarks Foundation, you'll find our website at www.bench-marks.org.za, and you'll find most of our publications there as policy gap publications. We've published some 14 or 15 reports on mining in the last 20 years, substantial reports, but we've also got community monitors in more than 30 communities in South Africa, which are young unemployed people who we train to monitor mining and to monitor the impact of mining on their communities and on society. So we look at it from a micro perspective, the perspective of the people impacted and affected, and we give them their voices. There is also communitymonitors.net, where these young people publish their reports and so on a regular basis, and we train them how to engage with power and how to engage with mining companies and how to interact with the major role players and so on, in order to try and resolve the conflicts and tensions that result from mining in their areas. We've had a number of court cases in South Africa, which we have won against big mining companies and so on. We are at the moment involved in at least 7 or 8 different court cases in the country around what is happening in the industry in this country. Now, South Africa was the biggest producer of gold for a very, very long time in the history of humanity. I think until now, we probably produced more than half of the world's gold, even now, when we speak about that. And we are still the 13th largest producer of gold in the world, and we have lots of refineries, as Yvan already indicated previously. But with mining, the large-scale industrial mines are leaving South Africa because it's no longer profitable to mine here for a variety of reasons. One of the reasons is that the gold is ultra deep. The mines are filled with water. There's lots of seismic activities, which makes mining very difficult and very dangerous to do. And so AngloGold Ashanti, BHP Billiton, and a host of other companies have left this country, having mined here for a very, very long time. Anglo American Corporation is in the process of leaving the country as we speak. And consequently, we've got 6,200 abandoned mines which have not been rehabilitated, and which pose a very serious risk to immediate communities, but also very serious risks to the country as a whole. And I will mention some of the risks that are involved here. One of the risks that is involved is dying rivers. Our rivers are dying from acid mine drainage coming out of these mines into the river system, and we've got a number of rivers which are practically dead as we speak. And our most important industrial river, the Vaal River, is under very serious threat at the moment. And farmers as far away as 600 kilometers away from the gold mining area in Gauteng or in Johannesburg are complaining that the annual floods that come from the watershed that is the Rand, where most of the mining took place, go over the mine waste that has been left behind, goes into the river, and then deposits mine waste on the mine land 600 kilometers away, making the soil unfertile in that particular area. South Africa is responsible for 89% of Africa's waste production, and most of that waste is mining waste. South Africa is responsible for 98% of Africa's air pollution, and a lot of that has to do with the refining of minerals and the processing of minerals and so on as well. So South Africa really is a very big polluting entity on the southern tip of Africa, all as a result of mining. But with the fact that big mining companies are leaving the country, large-scale mining companies are departing, we have tens of thousands of unemployed workers, and we have workers being retrenched from the mining sector all the time, which poses a really big problem in the country, because we've got almost half of our country's population in real terms are unemployed. According to the government figures, it's about 35% unemployment, which is astronomically high in any case. But in terms of real unemployment, we're way closer to 45%. And that poses a real problem in our country. What is also terrible is that most of these mine workers came to South Africa from neighboring countries. They came from Lesotho, they came from Zimbabwe, they came from Mozambique, and so on. And this led to the underdevelopment of those countries over a period of 130 years, because the labor foundation, the labor base of those countries was exported to South Africa. And so there was no labor force to actually develop those particular countries. And so now that mining is finished, these people become illegal immigrants in South Africa because they no longer have work permits and so on. But what is really terrible is that there is 44 billion rands worth of pensions that mining companies have not paid to their former employees. And there's a lot of money, billions more, of unemployment benefits and of disability grants and all kinds of payments that are owed to these workers, but the fund managers pretend that they can't find the workers to pay out these funds. Of course, they require that these workers be computer literate, that they have electricity, that they have access to computers and fax machines and cell phones and so on, which they often don't have in remote rural areas of Mozambique, Lesotho, and other areas. And so the fund managers make a huge profit out of the interest that is made from the funds that are unpaid. So the interest that they make is in fact a disincentive to paying these particular workers. But now some other issues which Yvan has not really discussed as yet, and that these are issues that are environmental. One shaft in South Africa generates 6,000 liters of methane a second, one shaft. There are 6,200 abandoned mines. Very often one mine has more than 3, 4, 5, sometimes even 10 shafts. The operating mines of the few companies that are still operating also emit methane on an alarming level. And methane is a far more vicious climate gas than carbon dioxide. And it is 20 times more damaging to the atmosphere than what carbon dioxide is. And we are not controlling that flow of methane. And the big mining companies, global mining companies, have all left South Africa, and they have not rehabilitated their mines as required by law. They have not closed their mines as required by law. And what then happens to these mines is that the mine workers who used to work there come back as ASMs, as artisanal miners, and they are considered to be illegal miners, and there's a war going on between the South African security forces and these former mine workers who have occupied these old mines that have been abandoned. Now, when people are unemployed, they go back to the mines, they strip all the metal from the mines and they sell it as scrap metal to the scrap metal industry, which is a booming industry in South Africa. And then they go underground, and because they know where to find the gold and so on, they take what crumbs of gold are left. And it's estimated that some 14 billion rands of artisanal gold comes into the system through these former mine workers that are operating, that are just trying to actually put food on the table, but are being manipulated by syndicates that exploit them. So the syndicates supply the artisanal miners with mercury. One eye drop bottle of mercury, if you can see this little bottle that I'm holding up, one eye drop bottle of mercury costs 2,000 rands. A 20-liter bottle costs 65,000 rands. Now, once you supply the mercury to the artisanal miners, you actually control them, because they are dependent on you for the mercury. And mercury is a proscribed material. You're not supposed to be able to get it very easily, but you can go on to Google in South Africa and you can find suppliers for small scale and medium scale miners of mercury. And mercury should not be in the mining process at all. You know, the big mines used to use cyanide, and cyanide degrades when it's exposed to sunlight and air, whereas mercury does not. Mercury goes into the rivers and it becomes a huge, big problem. The other big problem with these mines and the mine waste that we have around South Africa is that there's a bouquet of minerals that are associated with gold mining. One of those minerals that are associated with gold mining in South Africa is uranium. Another one is arsenic. A third one is lead. And of course, also the sisters of uranium are also to be found in this mine waste. Now, due to apartheid spatial arrangements, Black communities were put into townships or urban ghettos on the wrong side of the wind of these mine waste sites, because that was the cheapest land that the apartheid government could find to put accommodation and housing for Black people. So Soweto, in fact, is a huge problem. I consider Soweto to be a crime against humanity. And what we find amongst young people in Soweto is cancer and leukemia, especially amongst teenagers, is extremely high. But also a variety of other illnesses and problems are associated with the mine waste and the mine dust that blows. We had a very dry country, and when the wind blows, these dry mine dumps then deposit dust into Soweto and other areas like Tabong. And I can name every mining town where there is a township. It was the Black people who were put amongst the mine waste by the apartheid regime, and they continue to live in that mine waste. So in parts of Soweto, for example, we have very serious problems with uranium poisoning, where mothers get pregnant and then the babies that are born with deformities. There's also very high levels of cerebral palsy throughout Soweto as well, as a result of the pollution that is there from the mine dumps themselves. You know, so we have a problem in that large-scale companies that have very glossy annual reports and that sell gold legally, globally, have simply walked away from their responsibilities as far as mine closure and rehabilitation is concerned in our country. As many as 6,200 mines have not been closed. An Anglo-American, which had a monopoly under apartheid on gold mining, is now busy leaving the country, and it's leaving unrehabilitated mines all over the country. And also, of course, De Beers, the diamond mining company, is leaving unrehabilitated mine sites all over the country. Just recently, we had a tailings disaster in a small town called Jagersfontein, where more than 300 houses were destroyed by the tailings disaster, and many people died as a consequence of that tailings disaster from diamond mine tailings that broke and washed through the community in that particular area. So I've spoken a little bit about air quality. I've spoken a little bit about rivers dying. I've spoken a little bit about climate gases. The other aspect which is very problematic is, of course, the destruction of soil and soil fertility as a result of the dust that blows from these mine waste sites and so on. And also the fact that once a company leaves a mine, the mine tailings is no longer maintained, and it very rapidly disintegrates and becomes part of the environment, the surrounding environment, and very often the people who live in that surrounding environment are the poorest of the poor people in the South African context. Then we have not done any planning in South Africa for a post-mining economy, and mining prevented the country from developing a sufficient middle class that would be able to consume manufactured goods. And so South Africa never developed a manufacturing industry. Despite the fact that we have been a major producer of gold, we don't have a significant jewelry industry. Despite the fact that we've been one of the biggest producers of diamonds in the world, we don't have a diamond industry. The point that I'm trying to make is that the reason why we never developed manufacturing in this country, we produce some of the best iron in the world as well, but we don't do anything with our iron. In fact, our iron industry collapsed more or less recently after privatizing the state-owned enterprise that produced iron. Now, the reason why we did not develop that middle class is simply because the wages that was paid by the mining industry and, of course, by the agricultural sector in this country was too low. Even though we've got a population of almost 60 million people in this country, they don't represent effective demand in the economy because they earn too little wages to be able to buy manufactured goods on a large scale. So it's only a small elite, a small minority of people in this country that can afford manufactured goods, and therefore manufactured goods are all imported, and we don't produce anything by way of manufacturing. And so the high gold price at the moment is causing the government to issue mining licenses that are hugely problematic in old mines that should be rehabilitated. So the only gold left in these old mines are in pillars deep underneath the surface. The kind of mining that took place here was bored and pillar mining, which meant that the mining companies extracted the gold but left pillars to keep the roof up. Now the government is issuing pillar stripping licenses to mining companies, and sometimes very dubious Australian and Canadian mining companies, to go and strip those pillars underground. And this is actually a recipe for disaster, and we've had some very serious accidents involving pillar stripping in this country as well. And when you strip the pillars, and you have acid buildup in the voids below the mining areas, which eats the dolomitic rock, because dolomite is like chalk, and acid and chalk don't go together, you start getting sinkholes. And in areas like Kutsong, which is a very densely populated urban area with working class people in it, houses and so on are starting to disappear down sinkholes and so on. And this is something that we need to look at. Now, we are in a post-apocalyptic environment in South Africa at the moment. People talk about crime, they talk about corruption, they talk about instability in the South African context. All of that can be related to mining. And just this week, the government introduced a tax on chrome mining, and the mining industry rejected that. The government's reasoning was that they want to increase tax on chrome mining by 25% so that chrome can stay in the country and manufacturing can happen with that chrome, or processing can happen with that chrome. The mining industry absolutely refused that and said they won't accept it at all. So the mining industry is really not interested in manufacturing. When we talk about a transition to alternative energy, South Africa's energy is largely produced by coal. And we have suggested to our government that they can actually invest in the same townships where there's mine waste, to actually take those waste sites, to rehabilitate them and put solar plants wherever there was mine waste sites, because every mining site had an electricity substation that feeds into the national grid. And so these townships can then, these working class areas can then become producers of electricity for the national grid in the country. But the EU and others have said no. The manufacturing of solar electricity in South Africa should happen with companies that come from the EU and from investors from Korea and so on. So basically making it impossible to find a solution in terms of a just transition for the working class that is now largely unemployed and, the decline in the large-scale mining sector has impacted on. We've got asbestos in many of our townships on the roofs, another legacy of apartheid, and these asbestos roofs can be replaced with solar roofs, and the occupants of those houses who are mainly unemployed and cannot afford electricity can then become part of the suppliers of electricity and generate an income for indigent households, and thereby begin to revive their participation in the economy. Again, it's something that no one wants to hear, no one wants to talk about, because a just transition in energy in South Africa excludes the poor, it excludes the working class, it excludes former mine workers, and so on from that process. And I'm sorry if I kind of moved away from the more financial aspects of the previous speaker, but I think that we need to speak about the issues on the ground. I can report equally horrible stories from the Democratic Republic of the Congo and from Zimbabwe and other countries in Southern Africa, but I don't think I have time to do that. I think I've reached the end of my 10 minutes now. Thank you.
Thank you so much, David. I would like to hand over to Michael Tost, and we have heard quite a lot already now about gold extraction and the effects it has, and we did hear already some technical issues, but I think it's also worth to understand more, maybe also about the large-scale mining that Yvan has also been talking about, and a lot of there's a lot of small-scale miners, and most of people are employed in small-scale mining, but the majority of gold and the high volumes are extracted actually in the large-scale mining, and there's a lot of projects in the pipeline, as we saw in different new statistics that came out. But maybe let me present you first. Michael is an environmental engineer and a mining specialist, and I learned in our talk before there's a difference between being a geologist and being a mining specialist. He's professor of sustainable mining technology at the Technical University of Leoben. For those who don't know, the Technical University of Leoben is a big university in the south of Austria where a lot of mining specialists are trained, and I think it's kind of a worldwide hub for specialists who then work in the whole world in the mining sector. A long tradition, because Austria is also a mining country. Michael's work focuses on environmental and climate impacts of mining and how mining can be organized in a more sustainable way. And please.
In the briefing to today's discussion, you wanted me to talk about sort of the geology and the mining aspects, as you said before, the large-scale mining aspects. Yvan and to some extent David already mentioned a number of those things, but I will go back into sort of some more details, I guess, starting really with the geology. Also, I am personally not a geologist. But let me start with a number of statements where Yvan said that gold is rare, and part of that rareness actually is responsible for the value that we put on it, and despite sort of being shiny, being heavy, and you can get a lot of value in a small sort of mass or in a small amount. From a geological point of view, let me start with one statement. Gold is actually everywhere around us, yeah? As are all the other elements on our planet. The question is just how much of that is everywhere. And this is where sort of geology and then the mining comes in. The concentration of gold around us is very, very, very low. And what the geologists actually look at is they look at the anomalies in those concentrations. And we then call those anomalies occurrences, where you have larger concentrations, or you actually call them deposits in the next stage. So we look from a geological point of view, we look at deposits of gold. And the next step then would be to assess those deposits, whether or not via drilling, via geophysical methods, etc., whether or not it's actually worth to then extract those deposits. And this is basically where I come in. Once we have a resource, a reserve, as we call them, where we have a high certainty that a deposit is there, i.e. higher concentrations, in this case of gold, exist, then we come in order to sort of extract them, in order to mine them. Yeah. So a couple of numbers related to that. We've so far mined roughly 244,000 tons of gold in history, and those are numbers by the US Geological Survey. So Magdalena, very sorry, but with regards to historical numbers, I'm not using world mining data, which comes from Austria, but I'm using the US data. Discovered we have 244,000, and out of those, we've roughly mined 190,000 tons. The large majority of that after 1950. So very similar to with some other trends, the great acceleration actually took hold here as well, that the large-scale industrial mining sort of kicked in after World War II, after 1950, very much so. So the large majority has been mined, which means that currently we have global reserves where we think it is economically feasible and make a profit basically out of those deposits in the ground of roughly 64,000 tons still in the ground. Yvan already mentioned we're mining around 3,500 tons a year. So that gives you roughly reserves of 20 years. Yeah? When you look at the less well-defined resources, sort of one category below on how much we know about those deposits in the ground, it's factor 10. Yeah, so the bottom line from a geological point of view, we will very likely not run out of gold in the next centuries, actually. And that's, by the way, quite similar to a lot of the other metals, to a lot of the other materials that we are mining as well, that reserves and resources are there at least for decades to come, if not centuries to come, and if not millennia to come. The largest reserves, Yvan again mentioned already, countries where the reserves are. Australia, the largest, together with Russia, quite critical, obviously, in the current context. South Africa still has reserves left, comes as number 3 at the moment with regards to reserves, but David already mentioned, not easy to extract them. Those are the deep underground mines. In fact, the deepest underground mines, roughly 4,000 meters deep, is actually a gold mine in South Africa. And that comes with all sort of safety related issues. David mentioned seismic events play a role there. Heat plays a role there. Rock temperature roughly 60 degrees there, which is not very friendly or very healthy for humans to work in such environments. So you need a lot of energy for cooling the rocks down there, and various other aspects that then play a role. Fourth largest reserves, Indonesia, and then you have China and the United States with around 3,000 tons each as reserves. So there is different types of deposits. I don't want to go into too many details. Again, some of the aspects, some of the issues were already mentioned also by David related to those various types of deposits, but a sulfuric type of deposits play a role there from an environmental standpoint. Acid rock drainage has already been discussed and already been said, can be a consequence of the type of deposit as well. So we're talking about orogenic gold deposits, epidermal gold and silver deposits, very, very fine, very sediment hosted, disseminated deposits where the gold is very, very fine, and you would actually call that as invisible deposits. They play a large role. And then you have polymetallic deposits as well that play a role. And then you have sort of those placer or paleoplacer deposits Witwatersrand was already mentioned as an example, where you kind of find the nuggets, etc., as well, where you have the higher concentrations as it used to be with the gold run in California or in Western Australia decades or even centuries ago, where kind of you have those the pictures of gold panning, etc., in your head as well. How or where is that relevant? The different types I already mentioned, sort of acid rock drainage. What is also of relevance, and I'll get to those type of numbers in just a second. There is deposits where gold is not sort of the single metal that we are extracting, that we are mining, where it is a byproduct, for instance, with copper, or where it is a byproduct with iron ore, copper, and gold, so-called IOCG deposits as well, or it is a byproduct with other metals such as silver. Yeah, I'll get back to that aspect in just a second with regards to numbers. So Yvan already talked about current production, the 3,500 tons. The number one, or the five largest countries, he mentioned them as well: China, Russia, Australia, Canada, the United States, and some developing countries then to follow, with all the consequences that David mentioned in his conversation. So I don't want to go into sort of the details. Karin already mentioned some other numbers. We're roughly spending $12.5 billion on exploration. From a mining geology point of view, that's our research. Yeah, we have to kind of find the new deposits in order to keep the pipeline filled. From my perspective, unfortunately, about half of that is actually exploration for gold. Because of the high prices as they stand at the moment, because of the high value, a very large amount of the mining research, if you want, goes into gold, rather than going into sort of those transition metals that we talk a lot about, rare earth elements, copper and whatever, lithium, that we actually need for the energy transition, for the digital transition, etc. And I just yesterday, I don't know, some of you might be reading mining.com and you received a newsletter. Just yesterday, there was an article there that we've reached the highest spending on gold exploration in Australia in the last quarter since, I think, 30 years, or for the last 30 years, it hasn't been as high as it is just this year, given the rise in gold prices that we already talked about. In terms of numbers, large-scale mining versus small-scale mining, I looked at those numbers as well. Yvan mentioned them roughly. The very large majority of the gold extracted comes from large-scale mining. Numbers vary a little bit on what you can find there, because of sort of those uncertainties that Yvan already mentioned as well, particularly with small-scale mining. But roughly, according to the World Gold Council, new mined gold, 80% is large-scale mining, 20%, somewhere in that range, is actually small-scale mining. And what is of relevance, I think, in terms of those deposits that I mentioned before, roughly 7% of the large-scale mining of the gold actually comes from deposits where gold is a byproduct. Yeah, so it's in the single digits, but nevertheless, it is a large part of the overall total. And I also looked, I did not very much so prepare for sort of the consumption numbers, but when you look at USG, United States Geological Survey consumption numbers, what is used industrially is roughly in that amount, in that size. So what we need for our industry, what we also need for communications in a mobile phone, whatever, what we also need for the industry, for the digital transition, etc. We could actually provide that as a byproduct, roughly speaking, from an amount point of view, from mining all those other metals, where gold only is a byproduct. And the rest, very much so, is the jewelry. The large majority is the bars that we put in deposits, that we put in bank vaults all around the world, that from my perspective, from a production point of view, don't really have a value other than that security, other than that safety aspect in uncertain times, etc., that Karin and Yvan, you already talked about. Yvan already mentioned the mining process, so I don't want to go too far in that. It's a standard hard rock mining process from our point of view. Very large majority is open pit mining with all the consequences related to that, land use, as well as water use, as well as energy use. Smaller part is underground mining, that was already mentioned as well. Maybe just some addition to that. Yvan mentioned a number, but I just really want to re-emphasize it. We're talking in industrial mining these days concentrations of 1.5 grams per ton. Yeah? So I just want to let that number sink in, because to turn that around, indeed, that means that 999.999 kilograms of what is being mined in gold mining is actually waste. Yeah? So that's the tailings that have already been mentioned, that you basically just put aside as part of that process. So we need to realize that, again, when we put jewelries on our fingers, or when we put jewelries on our ears, etc., that there is a very large backpack as a consequence of the extraction process related to that as well. So land use, not just for the bits, but also for the waste disposal, also becomes an issue. The chemicals used in the process were already mentioned. So cyanide is the number one chemical basically used in industrial mining these days. Much of that is actually in tanks, so it is controlled environments, it is closed environments, but not all of it is. Heap leaching has already been mentioned, so you just put, and it can actually be a staged process as well, that your first stage is tanks and the controlled closed process, and then you sort of use in a second process, a second stage process, heap leaching as well. And we've seen a year, 2 years ago, maybe pictures of what can happen there as well. Same as with tailings, if things go wrong and some of those structures basically break down, that can have significant consequences to the environment. Again, there was such an incident of a heap leach, a breach or collapsing in Turkey. If it wasn't last year, then it was 2 years ago. And tailings stems, not just gold mining related, but in general, I think we've seen them and we've heard about those in recent years and in recent decades as well, with things changing with regards to technology there, slowly but surely happening. And the last stage, I guess, Yvan already mentioned as well, is sort of the smelting and refining process, where again chemicals might play a role. You use the leaching process, basically the cyanides, to get the gold out of sort of the mineral phase, and then of course you need to get the gold out of the cyanide, out of that gold-bearing solution again as well. And for that you use activated carbon or zinc in another sort of process in order to get to the doré. that Yvan already mentioned, and then you go into refining to get to the very pure gold that is being used either in jewelry or in the bars or in industrial uses. Yeah? Cyanide is not sort of the chemical of choice in acid in artisanal and small scale mining. Yvan talked about that already, and it's quite well known. David mentioned it as well, that there you use mercury and the amalgamation process. What I want to re-emphasize there is really the recovery rate is very, very low. You only get about 30% to roughly 40% of the gold out of the gold-bearing ore in that case. So even more goes to waste there in those processes. And we don't need to, I don't want to go into sort of the mercury use and the consequences to the miners themselves, to the environment, to fish, etc., and the impact on the habitats there as well. And I guess I'll leave it there in the interest of time with regards to sort of an overview. Maybe just one more comment from my end. Again, that was mentioned by Yvan already, but I just want to point that out as well. Gold has the highest recycling rate, yeah, because of its value. More or less everything that has been mined is still somewhere in the circle. So I just want to point that out from a circular engineering or from a circular economy point of view. Gold is actually the material with the highest circularity rate, or at least one of the highest circularity rate, but that's again related to its value. And bringing that back to mining, and I'm speaking, I guess, against my profession from that point of view, but with regards to value-adding uses of gold, with regards to sort of industrial use, etc., with regards to what we already have and how much is still available, we would not have to continue mining for primary gold, but rather sort of we could recycle and we could, whatever we have in vaults, whatever we have around our necks, on our ears, on our fingers, etc., make a much better use of that. We just simply, I think, well, it's not a simple process, but we'd have to change our sort of social conventions on what is sort of the security value-bearing sort of metal of choice or material of choice, so to speak. I think we could actually change that as a society, and then we would not have to use gold for that, with all the consequences in the mining, in the refining, etc. process that we're discussing today.
Thank you so much, Michael, for this overview, and also for showing us actually that, I mean, it wouldn't be, there would be no necessity to mine anything anymore, and that 7% is a byproduct. Gold is a byproduct, so this, it's, yeah, it was a quite clear illustration of the questionable use of gold, given their environmental and social impacts. Yeah, so before we go into the public discussion, the question that still stays here is what can be done? How can gold be regulated better? We heard also that a lot of gold is traded in illegal flows, so that it's not even beneficial for the countries where it's extracted, because they cannot raise any taxes, and there's also a lot of other harmful practices. So I'll hand over the floor to Magdalena Pupp in a second, after presenting her to you. She is a policy advisor on mineral resources for the Austrian Ministry of Finance. The Austrian Ministry of Finance hosts the department working on raw materials. And there she's responsible for the implementation of the EU conflict minerals regulation that Yvan has shortly addressed in his speech. And Magdalena is a geologist by training, and she has worked also in different countries, and she has also worked, for instance, in Rwanda, also from a perspective of a resource exporting country. So what can be done, Magdalena, to at least regulate the gold sector a bit?
Thank you, Karin. So I'm going to share my screen with you. Just give me a second. Can you see the screen now? Okay, perfect. Okay, well, I'm talking about the very boring part about legislation and supply chain due diligence. And to put it in a bit of a frame or a context, trying to get this. How can I? Just give me a second. Okay, I'm giving you a bit of a historical overview what needed to happen in brackets that we have now supply chain due diligence legislation. So the story sadly starts not in South Africa, but still in sub-Saharan Africa, in the Democratic Republic of Congo. And as you know, the DRC has a horrible history, which started with Belgian rule, where over 300,000 laborers from the neighboring countries, especially Rwanda, were forced into the region of Eastern Congo to work for agriculture, mining, rubber production. After Congo's independence in the 60s, 30 years of mismanagement, of ethnic conflicts, of a lack of state structures led to, yes, hazardous circumstances, politically speaking, especially in the eastern part of the DRC. As you know, in 1994, there was also the additional point of the genocide in Rwanda, which led to a huge host of refugees in the who migrated into the eastern part of DRC as well. So in the eastern part of the DRC, we have this very conflict situation with different ethnicities, and we also have the situation that this is an area that has favorable geological conditions for certain minerals like gold, cassiterite, coltan, wolframite, diamides, cobalt. Yeah. So in 1996, there was the first Congo war, which led to a change in leadership, and directly afterwards there was the second Congo War, so which is the bloodiest conflict since the Second World War to this date. So this whole region is actually very destabilized. And as a result, in June of the year 2000, the UN Security Council established a group of experts on the Democratic Republic of Congo. And this group was also tasked with investigating the illegal exploitation of mineral resources in the region. And this council led to initiatives, to the establishment of initiatives, governmental and non-governmental ones. And some of these initiatives are, first of all, we have the US Dodd-Frank Act. It's actually the Dodd-Frank Wall Street Reform and Consumers Protection Act. And there is article or section 1502 that contains the mandatory due diligence requirements for supply chains, for resources, so as already mentioned by Yvan, tantalum, tungsten, tin, and gold from the Great Lakes regions of DRC and its neighboring countries. A couple of years afterwards, the OECD, so the Organization for Economic Cooperation and Development, published the OECD due diligence guidance for responsible supply chains of minerals from conflict-affected and high-risk areas. This guidance is a voluntary 5-step guide for due diligence of mineral supply chains. In 2017, so nearly 17 years after conflict, the EU Conflict Minerals Regulation was published, which came into force in 2021. So I'm going to go into detail in this regulation in about a minute. Then, yes, a couple of years afterwards, so with 2023, the Ordinance on Due Diligence of Transparency regarding minerals and metals from conflict areas and child labor came into force in Switzerland, which is also very important, as we have already heard from Yvan, because it's one of our main gold hubs in Europe. And then also in 2022-2023, the UAE published a federal decree law number 20 of 2018 on anti-money laundering and combating, but as we've already heard from Yvan as well, not that much changed. It wasn't very successful so far. So coming back to the Euro regulation. It's called the Regulation of the European Parliament and the Council of the 17th of May 2017, laying down supply chain due diligence obligation for union importers of tin, tantalum, tungsten, their ores, and gold originating from conflict-affected and high-risk areas. That's actually a mouthful, and only the European Union can come up with names like this. So we call it Conflict Minerals Regulation in short. And to understand how it's made up, we focus very shortly, very briefly on a simplified supply chain of gold. We have the large scale and the artisanal miners at the beginning. We then have traders and exporters. Then all the minerals are more or less transformed to a smelter or a refiner, where from the original mineral state we go into a metal state. So where ingots or concentrates are coming out of. These are then taken into manufacturing, and in the end we have this product. And then we are going back, as we say, the recycling circle is going back then to the smelter and refiner stage. So, and these smelter and refiner stage is actually the choke point, because we have a lot of mines. We are going to a handful of smelters and refiners in comparison, and then we are going to a lot of manufacturers. So this is the choke point, and this is the point where actually the conflicts minerals regulation is aiming at. Okay, the conflicts minerals regulation is always saying, okay, we are going to conflict areas. What are conflict and high risk areas? These are areas where armed conflicts are being waged or which are in a fragile situation following said conflicts, as well as areas where governance and security are weak or non-existent. So on this map you see these are the CARAs, so the conflicts and high-risk areas of today. It is taken from the European CARAs list that is published by the European Commission on a quarter-yearly basis. And what are we doing now in the sense of the regulation? The regulation has five. So the regulation has 5 points that we are looking at. The basis is that it regulates the obligations for union importers of these 4 minerals, especially gold, into the European Union, who import above a certain threshold. So these thresholds are actually calculated, then 95% of imports in the European Union are covered by these thresholds. But it's also protection of the small SMEs, European SMEs, because they are often too small. So if you're only importing, I don't know, 3 grams of gold, you're not within the regulation. And the regulation is focusing on 5 different points. So the first of all, we have the management system that is actually in Article 4. That's about the traceability of the minerals and metals to the country of origin, which, as we've already heard, is very, very difficult to do. And it's about establishing a management system that supports the due diligence schemes. Then we have the Article 5 with mandatory risk assessment. So that means union importers need to identify the possible risks, establish a system of risk management, and then try to create a system of mitigation for said risks. In Article 6, it says that we need third-party audits. That means that an independent auditor is auditing the risk assessment and traceability and transparency of our union importers. And then we have the issue of transparency. So our union importers need to publish certain information about their supply chain and about the due diligence that they're doing, which needs to be publicly accessible. And it also needs to include a whistleblower mechanism. That means that everybody who has some concerns or some issues with the supply chain and knows something can actually get a hold of the company. So what are we doing now? So this is what needs to be done by the union importers. What are we doing as a national competent authority? So we do so-called ex post checks. We go into the companies and look what due diligence they are doing. The first part is always a desk check. So we ask the companies to provide us with all the necessary information to prove their supply chain due diligence. Then we do in-house checks. So we go into the companies, see how well established these procedures are, how well aware their employees or the management is of these structures of the law, which they need to be, and how well these due diligence measures are actually established. Yeah, there are, although some issues with this, as Yvan already said. The first issue is certainly the lack of resources, not only on our part of the national competent authorities all over Europe, but also in the companies, especially small and medium-sized companies, who often lack the personnel to do really thorough due diligence. Then we have a lack of transparency. Often the companies, especially the upstream companies to our European companies, hide behind the screen of business secrets and competitiveness, so they are hesitant to share what they're doing and where their resources are coming from. We have a lack of traceability. That means that at a certain stage we cannot, in a scientific way, follow back to the mines with our minerals, especially with gold. Once it has been refined, gold is gold. There is no way to fingerprint it or trace it back to the country of origin or the mine of origin. Then we have corruption within the system, especially on the ground in the mining countries, because people are poor, the system is corrupt. So they're often, although the paperwork is clean, smuggled gold is within the clean gold. So this is one of the issues we are facing. We have a lack of sufficient auditors. As I said, we need third-party audits by independent auditors who actually have the qualification to audit our companies. The problem is that we do have a lot of auditors, but we are lacking the specific qualifications they need. We have so-called smuggling hubs, as we already said. For instance, UAE, that we know of, that smuggling gold is going in there, especially from South Sudan at the moment, for instance. So we know it goes into Dubai, but the paper trail is clean. So this is one of the issues that we are aware of. And as Yvan already said, we have the greenwashing. So which is kind of a circumvention also of the regulation, because resmelting the bars and saying that it's actually recycled gold excludes it from the regulation. So they don't need to do the diligence anymore, which is also a huge issue that we are facing. And if you're thinking about current conflicts that we're seeing at the moment, specifically to gold, so we have the DRC, as you know. There is a civil war going on in the east, which is supported by rebels from Rwanda. There is a lot of gold exploitation. There's a lot of gold smuggling into the eastern countries of the DRC going on. We have the civil war in Sudan, South Sudan at the moment, where a lot of gold is smuggled, especially into Dubai. We have issues in Mali, Ghana, Burkina Faso, and Cote d'Ivoire. And there is some Al-Qaeda going on there. They are using the gold for the terrorist organizations. In Indonesia and Peru and Amazonas, there's at the moment a crackdown on illegal mining. They are mining within the Amazonas. They are is illegal mining at the moment in national parks, even under horrendous conditions. As we said, especially environmental issues are happening there with aqua regia that we sell, with the cyanide, as Michael already mentioned. And we have some issues in Uzbekistan, which is one of the biggest recent gold producers. They have a very high anti-China movement at the moment, and China is one of our biggest refiners as well. So these are all the issues, and this is why we're doing the regulation. So I know this is a very dry topic, but if there's any questions, please, go ahead and don't hesitate to ask.
Thank you so much, Magdalena. And I think it's very important to hear, first of all, that there are efforts going on to make this more traceable, and we heard also that only by making the value chain more traceable can something be done also on the conditions, and also linking the consumption of gold to the production. And also thank you for pointing out the issues. And I think what you raised at the end is very important, that we didn't touch upon yet, is how many conflicts are actually caused by gold extraction, which is another aspect that questions actually the use of gold and the role of gold in our societies. I just wanted to thank you very much for the interesting conversation. I think it really combined very well together in terms of the different aspects that you brought in, and it was really important also, David, to have all the consequences that are coming with the gold